sixth module of the course. And this is actually where it's going to become a little bit more interesting, but also technical. The core concepts of price action. We are going into a little bit more details, into the nitty-gritty details of fundamentals, so to say, of the price action strategy. I will introduce you guys with price action terms, a little bit of jargon. So if the pace is going a little bit too fast, obviously you can always refer to the price action document, which you can download or which you can find in the very first introduction video of the price action course. So let's just kickstart it with the level to hold and the level to gain. So these are the two terms that I briefly discussed with the support and resistance and with the continuation chapter. And the level to hold is very equivalent, is very similar to a support level, and the level to gain obviously functions as a resistance level. So just to clarify, and again, I understand you might have heard this already a couple of times, really when it comes to trading, when it comes to price action, and especially the basics, repetition is key. With everything in life, you really need to be able, you need to put yourself in a position where you can just dream this, okay? So I will just draw a little bit of price action. So again, eventually, you know, we go from lower to higher and vice versa. And obviously you need to understand that whenever we have two levels, two horizontal lines, the lower, the bottom level, obviously is a level to hold, which functions as support, as in a potential bottom, every single time when price tends to hit it. And the upper line represents the so-called level to gain, which functions as resistance. So whenever price tends to go to the level to gain, it weakens and then it starts falling to lower prices. However, so this is interesting to know, this is a nice to know, obviously, but how do these two concepts get reflected within the reversal pattern? And that's very important to understand. So even though this has also been explained somewhat briefly, this is obviously the price, the reversal pattern. The reversal indicates a change in the direction, okay? We are potentially going from a downtrend to an uptrend, okay? So again, there are a couple of key components. So in this case, this number 2, the so-called swing high, the second point of the reversal, this is a very important aspect or component of the reversal, because from this point onwards, okay, if we are focusing on this point, a local top, a local peak, we are actually creating a so-called lower low, the lowest point within the reversal. So whenever this has been created, we obviously need to get above the so-called swing high. And the swing high is pretty much very similar to the level to gain, because previously we found some form of rejection that resulted in a lower low. So in order to break the downtrend, the current downtrend that is applicable, we need to get above the swing high. We need to get above the resistance level, the level to gain, okay? So whenever we gained this particular level, and again, when it comes to the gain, this is a very first sign of strength, You also need to understand there's a certain guideline, a thumb rule, which we can apply in order to identify the actual confirmation of a gain. And this is something very important that you need to understand. So a gain is not a simple touch. It's actually being counted or being reflected in the amount of candlesticks, these blocks, these candles that gets above the level to gain. So the guideline is, we speak of a confirmation of a gain. We speak of a confirmation of a gain when 2 or more candlesticks closes above the level to gain. So this is something that you really need to write down or take into account. And I will obviously apply the theory into practicality by showing you an example of a real life reversal, but this is something very important to understand. We speak of a confirmation of a gain when 2 or more candlesticks closes above the level to gain. So whenever we have this confirmation of a gain, which is pretty much the most crucial signal where all the alarm bells needs to go off, then eventually we are waiting for this so-called retracement, somewhat a pullback, and then we are very interested in the previous low. So where we have the swing high that functions as a level to gain, which is a resistance level, after having gained this level, we want to be interested in taking a potential trading setup around the previous low, the previous bottom. And the previous low, after gaining, that functions as a future or a potential support, a potential bottom. And then when we just simply apply this into practicality, and this could be a potential trading setup. That's something that you need to take into account. The previous low, the previous bottom functions as a new support zone after gaining swing high. This is something, these two sentences, okay, are very important, and that's something that you need to write down. So if we are going to apply the theory into practicality, then we are going to do as follows. So in this case, we are going to look for a potential reversal on the 4-hour time frame on the Bitcoin chart. Okay, on the top left, you can see that we have the candlesticks or the price action related to Bitcoin. So again, in this case, and it's already somewhat displayed, of course, but again, let's identify the higher time frame trend. So if we are going to focus from this point to this point, then obviously you are immediately able to identify that we are in a downtrend, because clearly it's very visible. Price is going from higher all the way to lower. But what do we need to do in order to break the downtrend? We need to get above a so-called swing high. Okay, and how do we identify the swing high? By simply looking at the place or the point where a lower low, the lowest point, has been created. This level, if we just follow the price action, the candlesticks in chronological order, because again, the reversal will always be created in chronological order. It just doesn't instantaneously spawn on the chart like this, okay? This is a level to gain. This is a swing high, because from this point, we create a lower price, a lower point than this point. That's something very important to understand. So we do know that whenever price gets above this particular level, not only are we interested in a trade, but we are also breaking the current downtrend, okay? So what happens? As soon as we get above this circle, okay, is what we can officially define as a confirmation of a gain. And that's something important to say as well. How do we define it? Because I was initially saying 2 or more candlesticks that close above or closes above a so-called level to gain. It's just very simply counting the candlesticks, okay? You need to count the bars, the blocks above the level to gain. And how do you do that? It's very simple. Don't overcomplicate it. Let's not overanalyze this. Let's not make it more difficult than it is. Again, whether you have 3 candlesticks closing above a level to gain or 30, that doesn't necessarily mean anything, okay? A confirmation is a confirmation. Okay, so in this case, if we would just focus on all the candlesticks within this orange circle, very simple. Let's just count the candlesticks. This candlestick, this large one, is the very first candlestick that closes above. This is the second candlestick. This is the third candlestick, the fourth, the fifth, and the sixth. So again, as long as the candles closes above the level to gain, and at least 2 or more candlesticks, then we can officially speak of a confirmation of a gain. And it doesn't matter whether it's a red candle or a green candle, okay? We don't make any differentiation between this. So this is just a confirmation. Whenever we see a confirmation of a gain of a level, then obviously that's something that I just discussed. That's a theory. We are very interested in taking a potential trading setup around the level to hold, okay? And this is also something very important to understand. So obviously, whenever price eventually gets to this particular zone or particular level, we are very interested in taking a trade. However, there's also a certain rule that we can apply, or a zone. You should never, ever have tunnel vision on one specific price. Okay, you should always see it as a zone, always see it as a box, so to say, which consists of multiple prices. So what do we do in order to make it a little bit more understandable? Instead of just focusing on 65,718, what can we do? As long as we have the confirmation of the gain, just know that you need to create a box. And how do we create a box? Again, this was the lower low. This is the previous low or the previous bottom. And eventually the previous low will potentially function as a future support whenever price happens to give this pullback. But what can we do? I would highly advise you guys to create a box, draw a box. And of course you have these so-called wicks, these tails at the bottom, and you take it from the bottom of the wick, the bottom of the tail, to the bottom of the candlestick. Okay, so as you can see, this was the bottom of the wick, and this is the bottom of the candlestick, of the red candlestick. This box, so everything, let's say between 65.7K and 66.5K, okay, because you can see the prices here on the y-axis. This is the probability that we want to play. Whether price goes to the upper part of the box, mid part of the box, or the bottom part of the box, that doesn't matter. The same probability applies because we have the confirmation of the gain. Just know this, okay? So in this case, let's say we would be interested in taking a trade within the zone. And again, it's up to you whether you want to take it on the top of the box or the bottom of the box. It doesn't necessarily matter as long as the invalidation, the stop loss, and this will obviously also be explained later when we are going to discuss the risk management module. This is a very, very good, a very sound, a very solid trading setup. Because again, after having the confirmation, all the candlesticks that closes above this white line, the level to gain, is the probability. And as you can see, what happens? Beautiful, beautiful, beautiful. Eventually, you're getting in the box, okay? And even though, I mean, I could have fine-tuned it a little bit, you know? Eventually, of course, you dump. But as long as you understand that the zone, this box, whether you're playing it here or playing it here, from that point onwards, you're somewhat going to get a pump. And that's the probability that you play in. That's how you apply the level to hold and the level to gain within the reversal structure. Let's advance to the move to the low and the move to the high. Let me actually give you one other clean example when it comes to the reversals. So what do we do when it comes to the level to gain? I would highly advise you guys to take the bodies on top of the candlestick, because obviously there's a very clear difference in taking the wick, the tail on top of the candlestick, or the body. I would highly advise you guys to take or to draw the line and stick it to the top of the candlestick, okay? The bodies, so to say. And then whenever it comes, obviously, to the level to hold, that's also something that I just explained. As you can see, we are very interested in taking a potential trading setup whenever price gained the level to gain. And this is something, of course, that we just count. Again, gain means to confirm a gain, we need to count at least 2 or more candlesticks above the level to gain. And this just very simply, counted by just checking the candlesticks, the amount of candlesticks that closes above the candle. So this should be actually 1, 2, 3, 4, 5, 6, 7, 8. In short, perfect. This is a confirmation of a gain. So when it comes to this point, obviously we take the body top. We take the body of the candlestick, and then when it comes to the bottom, we take the wick, the bottom part of the wick to the bottom part of the candlestick. And this again is defined by drawing a box. Never have a tunnel vision on one particular or one specific price. So in this case, the bottom of the wick to the bottom of the candlestick, and this is the probability in itself. Probability when price enters the zone is take the trade. And that's just pretty much what you want to do. So as you can see, obviously this is a very nice example of a reversal that went right. Again, this is a probability. We don't have 100% success rate on the reversals. It can also go left. You can also, lose an underwear and take an L and lose some money on this. But then again, this is a perfect example of a reversal. Probability, take the trade whenever you see a local confirmation being created.